Welcome back for another deep dive. Today, we're looking at something you shared, a YouTube video that's getting quite a bit of attention. It's called The Biggest Financial Crisis Happening Now, What They're Not Telling You.
Right.
So our plan is to, really unpack this, pull out the key bits, figure out what this video is actually saying about, global finance right now.
Yeah, think of it as a quick way to get up to speed on something potentially major, but maybe flying under the radar a bit.
Exactly. And you sent over this video. It seems to paint a picture of lots of challenges all linked together globally.
That's the idea. We'll be digging into the main points it covers, like the rising global debt, big problems in real estate, China, Europe, the U.S., and then bank stability, or maybe instability, and how consumers are feeling the pinch.
Trying to connect the dots, basically.
Precisely. Seeing how these different pieces might actually be part of the same puzzle.
Okay, so the video jumps right in with a pretty bold claim. There's a big financial crisis. It's not coming. It's already happening globally. But maybe not getting the headlines it should.
Yeah, that's the core thesis. Not a forecast, but a current state of play, according to this source. And it uses, three main examples geographically.
China, Europe, and the U.S.
Right. And the interesting thing is how the video links them. It doesn't treat them as separate issues, but as, symptoms of a bigger problem. So, starting with China.
Okay.
It talks about major issues in their property market. You probably heard of Evergrande, Country Garden, these huge developers potentially collapsing.
Yeah, those names have been in the news.
And it mentions loads of unfinished buildings, banks stuck with what it calls toxic loans, basically, loans unlikely to ever get paid back, often tied to those stalled projects.
And property is huge for China's economy, right?
Yeah.
Like a massive chunk.
Exactly. The video says almost 30% of their GDP. So if that sector takes a big hit, you can imagine the ripple effects globally.
Makes sense. Then it pivots to Europe. What's the story there, according to the video?
There, it points to the war in Ukraine driving up energy prices massively, which then led to, double-digit inflation in a lot of places. So central banks raised interest rates to fight that inflation.
Which then puts the squeeze on families and businesses.
Exactly. Higher borrowing costs, higher energy bills. It creates a lot of pressure. You can see how that would cascade.
Yeah, absolutely. It's all connected. And the U.S. isn't escaping this either.
Nope. The video says the U.S. is definitely affected. It mentions the Federal Reserve hiking interest rates too, and connects that to the mini banking crisis we saw in 2023.
Ah, right.
Silicon Valley Bank, Signature Bank. Those are the specific examples it uses to show that fragility. So different regions, different immediate causes maybe, but similar underlying pressures.
Okay, this is where it gets really interesting, I think. The video puts real estate right at the center of this whole thing, calls it a global bomb even.
Yeah, it's presented as a key pressure point.
Yeah.
We touched on China already, with that huge slice of their economy tied up in property.
Right.
But the video goes deeper, talking about the human impact. It's not just developers. It's ordinary people who put their life savings into apartments that aren't getting finished.
Wow.
And now they're refusing to pay mortgages on homes they can't even live in. That's a real breakdown of trust, a very direct hit.
That's rough. Really brings it home.
It does. Then shifting to the U.S., the video flags commercial real estate, offices specifically, calls it another ticking time bomb.
Because of remote work, post-COVID?
Exactly. Lots of empty office buildings.
Okay.
And the banks holding the loans on those buildings, the value of that collateral has dropped. It's a very visible issue in many cities now.
Yeah, you see those empty towers. And then Europe. Is it the same story?
Similar pressures, different angle maybe. In Europe, it highlights rising interest rates, making mortgages just too expensive for many people.
So young people can't buy homes.
Yeah, it locks them out. And you also see developers getting nervous, halting new construction projects, which, slows down the economy too.
So it's like a synchronized slowdown across major housing markets.
Yeah, that's the picture it paints. Whether it's residential in China, commercial in the U.S., or affordability in Europe, problems in real estate are seen as having the power to destabilize things more broadly.
Because it's such a core part of the economy.
Exactly. It's a cornerstone asset, drives a lot of activity. So trouble there can definitely spread, like a crack widening.
Okay, so after real estate, the video moves on to what it calls the monster in the closet, debt. Global debt.
And the number it uses is, staggering. Over $315 trillion globally as of 2024.
Trillion. It's hard to even picture that. How did we get here, according to the video?
It points to a few things. Governments borrowing like crazy for energy subsidies, war spending, inflation relief.
Okay.
Companies taking on debt just to keep operating. And regular consumers leaning more on credit cards, even for basics.
So debt is everywhere, basically.
Pretty much. And the crucial point the video makes is this. Combine that massive debt pile with rising interest rates.
And suddenly it costs a lot more to service that debt.
Precisely. That's where the real pain comes in.
Yeah.
It puts huge strain on everyone, governments, businesses, individuals.
That's to give examples.
Yeah, it mentions countries like Argentina, Pakistan, Egypt, already hitting debt walls, needing IMF bailouts. So it's not theoretical. It's happening now.
Makes it very real. And what about the U.S. debt specifically?
It highlights the U.S. national debt hitting $34 trillion. And it doesn't pull punches, suggests this level of debt could actually threaten the future of the U.S. dollar.
That's a big statement, linking national debt to the dollar's global standing.
It is. It raises that question about long-term sustainability, especially when borrowing costs are going up. Investor confidence is key, right?
Absolutely. Okay, so we have troubled real estate, massive debt. What about the banks holding a lot of this stuff?
Right. The banking system. The video describes it as fragile and exposed.
How so?
Well, again, those rising interest rates are bad news for banks in some ways. Specifically, it talks about smaller regional banks in the U.S.
Like SVB again.
Exactly. They might be holding lots of older, long-term debt, like bonds that paid lower interest. Now that rates are higher, those older bonds are worth less.
Okay, I see.
So if depositors get worried and start pulling their money out.
The bank might have to sell those devalued bonds at a loss to meet withdrawals.
Yeah. And that can lead to failure, especially for smaller banks without huge reserves or diverse assets.
And this isn't just a U.S. problem.
No, the video says European banks are feeling the squeeze too.
Yeah.
Tighter credit, more loans going bad, more defaults. It suggests a kind of weakness across the board.
And then it brings up something called shadow banking, particularly in China.
Yeah, shadow banking. It's basically financial activity happening outside the regular regulated banking system. Think certain investment funds, online lenders, things like that.
And why is that a concern? Less oversight.
Exactly. It's growing fast, the video says, and it's opaque. Harder to see the risks building up. So it adds another layer of potential fragility to the whole system.
So the takeaway is the banking system is maybe shakier than we think.
That's the warning. More vulnerable to shocks, potentially even systemic collapse if things go really wrong elsewhere. It's a pretty sobering view.
Definitely. So after painting this picture, does the video offer any hope or potential ways out, future scenarios?
It does lay out possibilities. There's a best case scenario.
Okay, what does that look like?
It involves smart government regulation, central banks managing interest rates really carefully, navigating things towards a soft landing.
Avoiding a major crash, essentially.
Right. Controlling inflation without killing the economy, dealing with debt without mass defaults. It requires a lot of things to go right.
A delicate balance.
Very delicate. But then, of course, there's the worst case scenario.
Which sounds bad.
Yeah. Mass defaults on loans, widespread unemployment, credit completely drying up globally, leading to a deep recession, or even, it suggests, a depression.
Wow. That really lays out the stakes.
It does. It highlights the huge range of possibilities depending on how these things play out.
And the video's final point seems to be about us, the public, our awareness.
Yeah, it argues most people are kind of unprepared. There's this assumption that things will just, snap back to how they were before.
But the video says the underlying structure has changed.
Fundamentally shifted is the argument.
Yeah.
Which is why, it implies, just waiting for normal to return might not be the right approach. And why understanding all this is important.
Right. Okay, so wrapping this up, this deep dive into the biggest financial crisis happening now. What are the main things to take away?
Well, the video really pushes the idea of looking beyond just the headlines, understanding how global debt, shaky real estate, and fragile banks are all sort of intertwined.
It tells us to dig deeper, which is what we tried to do here.
Exactly. And it does offer some, practical thoughts, things like diversifying your income if you can, diversifying savings, being cautious with investments, maybe keeping some funds liquid.
Sensible advice in uncertain times, I suppose.
Seems prudent.
And the final message from the video seems to be, don't panic, but prepare.
Yeah, I think that sums it up well. Understanding the risks is kind of the first step towards that preparation.
Hopefully this discussion helped with that understanding, giving a clearer picture of the points raised in the video.
Agreed. Just getting a handle on the potential risks and how these global systems connect is crucial for making informed decisions moving forward.
So on that note, maybe a final thought to leave folks with. We've talked about these connections, China's property market affecting global sentiment, for instance. Thinking about that web, what's maybe one unexpected sector, something not really focused on in the video, that you think could be significantly impacted if these trends continue? And what signs might you watch for?
That's a good question. Lots of possibilities in such a connected system. Something to ponder.